This is the Friday, December 12th, 2014 version of the Market Plus segment. Joining us now is Sue Martin. Sue, welcome back.
Thank you, Mike.
Now, during the show, we were discussing the feeder cattle market, and you were a little bearish on this feeder market, seeing as you've already lost $9. As we get into January, where do you see this heading?
Well, I think that the feeder market probably could see a decline of moving down on a lead contract. I think you'll take the January feeders down to probably around the $2 mark. You might possibly go lower than that. Ultimately, I think that we're going to break the $2 mark and go down to about $1.90, maybe $1.85, something like that. When you get down here in this next week, I will say this, indicators that I watch are getting, and their directional indicators, are getting extremely overdone. And timing indicators that I have as well are also starting to flatline at low levels. But, so that says watch the market here, you can get a bounce. Sometimes the seasonal in December will bottom by the 15th, 16th of December. Other years it takes a little longer, maybe takes till the 21st. And the bottom line here is that usually this cycle that goes down, or seasonal pattern, is usually a pretty strong-willed one to decline. If it goes much longer, it'll probably push itself right on into January. But because it's getting so overdone on some indicators, I think there will be a little hint of a bounce, probably led with fats first. And then everybody gets their hopes up again, and then it rolls back over, and then it'll probably get even nastier.
Okay.
So I would say that when I look at the fundamentals on cattle, longer term, they just seem to me like the market's headed lower. The only ray of sunshine today that I seen on the market was that the bull spreads were working in the fats. And for the last couple of days now they have. And so that might be a little hint also that maybe this market's catching itself here. You know, we'll probably come into next week, be a little lower, and then maybe try to start to turn around. And you've almost got a 50% correction from the August lows to, you know, the high here that we've had. So the market might catch here this next week and give you a bounce. If it bounces into about the 21st, I'd probably hesitate there and sell them again.
Okay. All right. Well, let's jump down and talk about the lean hog market, down $2 this week. Just demand issues, oversupply issues. What's driving the hog market?
Well, I don't know as if I'd call it an oversupply, but we do have a decent supply of hogs. It's the lack of the fact that we don't have any news or hear anything about PED virus. And so consequently, I think that the hog market is just following a path of least resistance. Now, since the cattle market has started to cave, I think that's sort of nudged the hogs along further in sympathy. But the hog market clearly has been on its own mission, and I think we need to see exports of pork to China, and we need to see that pick up, and we haven't seen that just yet. And I think the dollar's rally is kind of hurting us a little bit. So I think those are the factors coming into play, plus we are anticipating expansion, which, you know, the Hog and Pig report comes out on December 23rd this year, and it'll be even during market hours while the market's trading, which is the first time that's ever happened. And, you know, we've never had it before Christmas. It's always came after. And so it's going to be interesting because the market will have a chance to really look at it. It's going to be volatile.
All right. All right, well, now let's look at some of our Twitter questions that were submitted. Okay. We've got a question here from Bill in Spirit Lake, and you touched on this briefly on the show. He's curious, what will move grain markets before the late winter acreage battle? Is the market assuming a big Brazil soybean crop, and is there any hope to corn, for corn to China?
Well, I think, you know, we are going to see that eventually get resolved, especially now that they're finding that the Ukraine is not the consistent shipper that they had hoped. And of course, they loaned them money. I think they loaned them like $3 billion or something like that in the early part of the Ukrainian-Russian situation. But the bottom line is that I think as they deal with other parts of the world, they're going to find that the U.S. is a consistent shipper and they can count on us. And taking, you know, they love actually U.S. corn. It's just they didn't like the mere 162. Or let's put it this way, it fit into their plan at the time to move their own grain that was not good quality And if you had U.S. corn coming in at a much cheaper price, better quality, they weren't going to be buying at the auctions.
Okay. Now, we've got a question here. Looking out to next year, JJ in Oakley, Minnesota is curious, with an average soybean crop in the U.S. in 2015, do you think beans will have a better chance of trading above or below their current values?
Well, I think that when I look at the 2015 crop, we've got some things that are going to, it isn't going to just be the average yield. The average yield will probably still be a bearish factor. If you have a Brazilian crop first that comes off with, you know, the 95, say USDA is at 94, but say it's 95 million metric tons, even the 94, you know, that's up nearly 7 million metric tons or so from a year ago. And then if you have Argentina's farmers, which are being sort of nudged or forced because the bank isn't giving them any lending, so they're going to have to barter, and they have like close to 13 million metric tons of beans, and they're going to be selling. It doesn't matter if they barter for products to go ahead and put their next crop in, those beans are going to find their way to the crusher. So all of a sudden now, unlike this last season, we didn't have Argentine competition because the farmer wasn't selling. Now we will. And so that puts the burden on the soy meal market. In the meantime, you've also got at this time a 410 million bushel carryout in the U.S., which is a big carryout compared to what we've been, although we still have to realize that what's been supportive underneath all of this is the fact we didn't have much coming in. And so we had to keep using away at what we've got. But when we start getting into the next year, and all of a sudden our demand has slid away from us, we're close to 90% already of the U.S. export sales of what the USDA predicted for 2014, 15. Well, basically, what are we going to have in January? What have we got to talk about? I fear if China sees that that crop's coming to fruition, one big crop, they're going to back away from the U.S., might find an excuse, Liberty Link, so they don't have to pay any penalties, whatever, but they'll back away because it doesn't matter. They've already protected themselves with the dollar, buying the beans as fast and as early as they did, and they'll switch over to South American beans right at harvest time when the prices are already in a decline there and basis is dropping. They'll get much better deals, plus them doing that will drop our price even more. Then you come back with 83 million acres of beans planted in the U.S. Boy, you just are putting a bunch of beans on top of each other. What you're going to have is a weather market through the summer and it not cool and dry, hot and dry, and then maybe you'll stoke the market. I view this next year as a three-sided market where we're rallying. You break into spring, maybe even into early summer, then maybe we get a bounce in through July or into July, and then if everything's moving halfway decent, we just roll right back over and on down into fall.
Down into the fall market. All right. Yeah. So now, before we let you go, there's been a lot of interest in this crude oil market. We've watched it fall here week over week, down below $60. Does that trend appear to be continuing? Do you think we'll see $50 crude?
Well, yeah, I do. At first, we had a daily wave count, a small one, that projected to 63.82. And it was a wave 5, and usually wave 5s, we're never used to see them, and have been very good support. Well, we hit that, and then we bounced about $5, and then we turned around, and when we took it out, we had to go back to the drawing board and check it over. And looking at another daily potential, on a bigger scale, we could come up with 46-something on a lead contract of crude oil. On the weekly, we can also come up with a 44.50, something like that price. And then there's a trend line, a long-term monthly trend line on crude that's been holding for a very long time, and that comes in at $46. So I think that's where we're probably headed. But the bottom line is crude is getting itself quite cheap. And when we start getting down into those areas, when we go under 50 and we start getting down into those areas, you're going to have gasoline under $2 nearly most places in the U.S. That's good for the consumer, probably good for companies that are needing to run their factories. It'll also be good for the farmer to lock up his needs, his fuel needs, and I think this break should be utilized for that. But another thing it does is that as this market breaks, it's causing, ethanol, and it's causing biodiesel, all those products to be under the gun and to try to be competitive. Well, how do you be competitive with a rising dollar? They're going to have to fall back, and you only have, like in ethanol's case, 10% of the market share. Well, and then that leaves you about 1 billion gallons that you can basically, export. But to be competitive, if crude keeps going up, you're going to have to drop the price to make it competitive. So that weighs on corn. The biodiesel makes the soy meal say, okay, I'm going to have to step up to the plate and be the strong arm here to help beans out. Otherwise, we're all going to cave in together.
All right. Well, something to keep an eye on here as the rest of this year rolls forward.
Yes.
Thanks for taking the time to be with us, Sue.
All optimism, huh?
And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis right to you. Thanks for watching, and have a great week.